Well, good morning again, and welcome to the Black Homeownership Collaborative's third anniversary, DC's Blueprint for Bridging the Gap. My name is Sasha-Gaye Angus, as Charles mentioned, and I lead MANNA Inc., which is an organization whose mission it has been for the last 42 years to address solutions to intergenerational poverty through homeownership. And we do that by advocating for policy solutions, through providing homebuyer education and counseling, and we're proud to have delivered over 2,000 units of homeownership units that are offered to first-time homebuyers. So it is with great joy that I join you today to moderate this panel with our esteemed panelists, many of whom are partners, on this very important discussion. So today, the objective for us this morning is really to incorporate the local perspectives from Washington, D.C. as the Black Homeownership Collaborative explores national strategies to enhance and sustain Black homeownership in the United States through its 30 by 30 plan. There is no more fitting location, we believe, to have this conversation than Washington, D.C., where the Black homeownership rate has declined 12 percentage points over the last 12 years, reaching 34.8% in 2022. But right here in Washington, D.C., we have policymakers, practitioners, advocates that are actively working to close the homeownership gap. So let's start by setting the stage. I do, before I actually get into that, I do want to again let you know who's to my left. We do have Director Colleen Green, who was appointed the Director of DC's Department of Housing and Community Development on January 3rd, 2023. Prior to her appointment, Ms. Green was the Vice President of Business Development and Strategic Initiatives at Core DC and Managing Partner for Ashley Builders. Ms. Green has extensive experience in finance, real estate advisory services, operations, strategic planning, and business development. Welcome. We also have Harvey Yancey. For over 20 years, Harvey has worked with H2 Design Build. He's a principal of H2 Design Build and has been engaged in high-end, modern, contemporary construction and real estate development, while also establishing a strong footprint in affordable housing with the intent on creating livable communities. His vision is to stay on the cutting edge of real estate design and development while delivering a product that can be raised by the masses. Harvey was raised in the suburbs of Washington, D.C. and grew up in Alexandria, Virginia, and he is also a Howard University graduate. Lisa Williams' diverse skill set is leveraged at Homes by CFE through her varied role. Lisa manages CFE's corporate and organizational compliance. She serves as a staff liaison to CFE's board of directors. She oversees key operational functions and also directs the relaunch of City First Homes. Previously, Lisa worked in business administration, managing compliance with federal contracts for both corporations and nonprofits. She also owned and operated an online retail shop for more than 10 years. So let's start by setting the stage around this very important issue. We know that the homeownership ecosystem has many prongs, and each of our panelists bring a unique perspective as practitioners in the affordable housing industry. We have a developer, a lender, and a leader of a government housing agency at the table. So can each of you start by outlining what the homeownership crisis looks like for the constituents you serve? Briefly describe the problem from your vantage point. We'll start with Director Green.
Well, first, before I start, I just want to say good morning. I see so many serious faces out there. Like, I feel like I'm on the barring squad. I don't have all the solutions. I'll let you know now. But I also wanted to say it's really great to be at Howard. I don't know how many of you are connected to Howard. I hear Harvey's a Howard graduate, but I was born at Howard. I was born in the hospital at Howard. And my parents were married at Rankin Chapel. So although I didn't graduate from Howard, I feel like Howard's home, right? That's where I first took my breath. So happy to be here. It's challenging to buy a home in DC for any working class person. And the challenges are getting harder. In preparing for this, I asked my team, I said, well, how much is the average cost of a house right now today in DC? The average cost of a home is $695,000 in DC. So the median income in DC today is approximately $154,000. So the median income person can't buy that $695,000 home today in DC. And on top of that, 20% of that would be like, what, $130,000 in cash for 20% down payment. So that is a challenge. And as you know, there's a lot of tools that we're putting in place, and we can get into it. We have HPAP, which is our Home Purchase Assistance Program, and our Mayor Bowser, has raised that cap twice in her tenure, one to like $84,000, and then in 2022, I think, to $202,000. I don't know if you recognize 202, the area code. I do think that's how it came up, but because I'm not sure like why it was 202, but I think it matched the area code. But it was very helpful and a big help to purchasing homes. I think in 2023 we must have helped and assisted 654 home buyers. That took probably close to $70 million. In that year. Right now, the budget for the Home Purchase Assistance Program is about $31 million for 2025. It was about the same last year, and we still helped a fair number of people, but again, that is the challenge. Is that what you want me to
Yes,
say? It's challenging.
Harvey, let's hear it from your perspective.
Well, first of all, it's an honor to be back at the Mecca, and it's a privilege to speak about home ownership coming up through Alexandria, Virginia, watching the dynamics of the home buying change. I grew up in Delray, went to T.C. Williams High School. Actually, I played football at Norfolk State and got injured and transferred to Howard because I wanted to change my education and went to I was in the School of Business. Then from there, I got into doing multiple businesses because that's what Howard teaches you, to be a leader. And then I got into the homing market of buying houses and fixing them up and selling them. And it was interesting because when I got into it, I started seeing the same thing that happened in Alexandria happening in the DC area. As I started doing these cutting edges, I felt they were cutting edges because they were a dream for me of building these beautiful houses that I wish I had owned when I was growing up. And watching the neighborhoods change rapidly, and this is in early 2000s, when a lot of the homeowners that own homes and had a stakehold in the city for years start transferring ownership to either kids or just selling to move out. And my goal was to build these beautiful, or renovate these homes and have people stay in them and figure out how to stay in them. Fast forward 2017, I partnered with HFA with the HIP program, which was a program that did kind of geared towards like the missing middle, as we call it, to have government workers, EMS, the police, nurses, to be able to afford to live in the city. We did our study, and out of all of the city workers, the average pay was roughly just under $100,000, which they couldn't afford to live in the city. And that's Todd Lee, who kind of started the program, was like, we want to target and make sure that we have some type of assistance. The same thing from Ms. Green, what she was saying is down payment assistance, because a lot of folks that live in the city, or as they're transferring ownership to the homes that live in the city, that want to live in the city, down payment became problematic. And I started understanding, stacking the different programs that they have: EHAP, HPAP, tax incentives for police officers to stay in the city. And fast forward from there, we've probably delivered over 100 homes to what I call the missing middle, either graduates, DC government workers, or folks that just want to, have a stakehold and continue to stay in the city. The challenges now is the interest rates. As the interest rates goes up, that monthly payment goes up, and it becomes non-obtainable for that person who normally would pay, $2,500 for rent. Now it's $3,500 or $4,500, and the challenge now is trying to find different ways to solve for that in the market. And one of the ways that we've looked at, and even as a builder, we're giving incentives, because that's how it's important for us to make sure that on top of the programs is that we're going to take a little bit less on the back end, because we want to make sure that we keep an opportunity for people to buy homes in the city. So that's the biggest challenge right now.
Lisa?
Sure. Thanks for having me this morning. My name is Lisa Williams, and I am the Director of Mortgage Programs for City First Enterprises and City First Homes. We are a down payment assistance provider that operates in Washington, D.C. and select counties in Maryland. We're formed as a special purpose credit program. So in the process of developing our program, City First Homes had a previous version of its program, and we took a look at our program and what we were offering and who that program was benefiting. And since our organization is a CDFI, we prioritize economic justice and equality, and we determined that we needed to make some changes in how we were operating our program. And we relaunched in 2023 as a special purpose credit program dedicated to serving African American and Hispanic borrowers who are purchasing properties in the District of Columbia and, again, select counties in Maryland. How we did that is we did a lot of research, and part of that research was determining that there are significant systemic barriers that preclude African American and Hispanic borrowers, specifically in this area, from purchasing properties, whether that stems from, as was mentioned earlier, student loan issues, whether that's issues concerning DTI. Those are the most significant issues that we see with our borrowers in terms of how that process works and the reason for declination for many of those borrowers. One of the things that we've tried to overcome specifically is making sure that we are creating a program that provides opportunity and also has some flexibility in terms of its underwriting guidelines that's respectful to those systemic barriers. Those things were not created overnight, and we're not going to be able to change them overnight, and the only thing that we can do is be respectful of how borrowers were put in these specific situations and what we can do to try to overcome them by being sensitive to the research that exists everywhere that tells you that these are not more risky borrowers. These are borrowers that need a little bit of a foot up to get through the door to home ownership, and that in order for us to be able to provide these opportunities, we need to look at this program or these problems holistically all the way around. We don't underwrite borrowers looking at this problem as numbers. We like to look deeper into, how's their repayment history over the last 2 years? Do they have a stable job history? Will they be able to carry these payments later on down the line? And that's how we go about providing our down payment assistance loans. We also are supportive of our homeowners, because this is not just about getting a borrower in the door to home ownership. This is about supporting a borrower once they've purchased that property as well. Whether that means they hit a couple of bumps in the road later on down the road and they need some assistance in order to make sure that they're able to meet their financial obligations. We want to be there to be able to provide that assistance and direct them to the appropriate services to support that homeownership journey throughout this process, not just getting them in the door. I think a lot of this focuses on how to expand homeownership, and sometimes we don't take into account what we need to make sure that they're able to keep it. And issues like heirs property, financial assistance, all of those things come into play when we're thinking about issues like this.
Thank you, Lisa. So you've heard from our panelists that the demographics of homeowners or people who are trying to become homeowners look very different, right? They're not all low income, right? And this is a historical and systemic issue that stems decades and that many people need that assistance. Let's dig a little bit deeper and really sort of talk about what are some of the ongoing products, policy interventions, and practices to address these disparities. So I want to start with Director Green.
So I'm going to talk about the policies. I did talk about the HPAP program, which is a Home Purchase Assistance Program, and it's a down payment assistance. It's not a grant, it's a loan, but it's a very low interest loan, up to like, you can get it for 0% depending on your income level and other factors. So it could be as low as 0, and it has gone up to 202. We tried to stretch it because there's limited resources by bringing that 202 to make sense. We were at some point, we were in the first trust position, but we weren't a first trust in many of the home loans that we were involved in, and so that didn't make sense, meaning that we were more than 51% loan to value in the loan, and then if the first trust would go away, our position, which was larger, would be extinguished. So we were trying to make sense of that. But I do feel like the 202 is something that's here to stay. If we're going to have people that need more assistance and to achieve deeper affordability. But that also means that the resource will not stretch as far. So there's that. We also have the heirs property program, which came out of the Black Homeownership Strike Force, and that is to make sure that we are providing an opportunity to people that own their homes to transfer property to and wealth to generations of theirs. So those are the sort of two major home purchase programs. And we have obviously the Housing Production Trust Fund, where we're looking for developers to use that to develop affordable home ownership opportunities. So the homes would be sold at affordability of 80% of MFI and below. So we do that in sort of producing homes that are affordable, where there's opportunities. And we also have our property acquisition disposition division program. And so we'll acquire properties that are in distress primarily, or blighted, vacant and blighted, and repurpose them for home ownership. And when we dispose of them, for little to nothing, and so that provides a subsidy within itself. Where we have structured the property acquisition disposition division program, we are now working on some product that are 3 and 4 family homes, where the income from the rental property can be used to buttress the income of your job, or however you are is your primary source of income. So you'll become a landlord, but you'll also be able to afford a home, maybe more expensive than you would normally with just your income alone. So we have some product that's coming out like that. So I think we're always trying to find new and innovative ways to create home ownership opportunities. In this fiscal year, we'll be looking at maybe trying to create the 40-year mortgage, where we'll try to do a tail onto 30-year mortgages so that we can stretch those. So obviously, if your amortization goes out 40 years, maybe that's sort of a support to the higher interest rate, so that'll create affordability if you're amortizing over 40 instead of the normal 30. So we're trying to work on that product now to see if there's a way for us to do that. Some of the challenges with that is that we're not really, we're not in the business of tending to mortgages like that. So we do have to figure out a way to do that, but I think that that is another product that hopefully we'll be seeing come out soon. I'm trying to think so IZ is another way that we create affordable homes, and that if there are new constructions, a portion of it does have to be IZ, or IZ eligible, so that we create affordability in those homes. So those are just, I'm trying to think if I caught everything, but if I didn't, I'll come back to it, I'm sure. But those are some of the products that I can think of off the top of my head that we do for homeownership.
And that was at least 5 products that Director Green just mentioned that clearly the district is offering to help address the issue of access to homeownership. Let's hear from the private sector. Let's hear from Lisa. Lisa, if you could talk a little bit more about your special purpose credit program and what that's about, how you are supporting Black homeownership in the region.
Sure, and to answer your previous question, whether we've seen that our borrowers are all low income, they're not. I'm in a nonprofit and a CDFI fund specifically. And typically for CDFI funds, the goalpost is always homeownership for borrowers under 120%. And what we've seen is that we've had applications from borrowers who are well over 120%, specifically in the District of Columbia. I think it takes some very strategic thinking about how we are determining when those barriers end, because we're not seeing them cut off at 120% AMI. We've found that they tend to extend, and while borrowers at the lower end of the AMI scale, of course, are feeling those effects more significantly than borrowers at the higher end, it doesn't mean that there's any less of a gap when it comes to savings, the ability to put down enough to get into an affordable mortgage. Again, those numbers we were talking about earlier, that 20% down payment to avoid mortgage insurance is something that we always need to keep in mind. And while, yes, there are lovely federal programs, FHA is highly recommended. If you can get into the door with 3%, I think that that's a great program for most borrowers. But truth be told, some of our borrowers are not going to fit the necessary guidelines for FHA or need a little bit more flexibility in terms of what that looks like. So we work primarily with conventional mortgage loans. That has a minimum credit score of 620. Now, have we seen a lot of borrowers with 620 credit scores actually be able to get into the door for a property? No. And the reason for that largely is due to bank overlays. So the minimum credit score that we typically see is somewhere in the neighborhood of 640. Our current credit score average for our portfolio currently is about a 700. One of the things that we've set out to kind of prove with this program is that these borrowers, even though they need down payment assistance, are not more risky than regular borrowers. And how our program works is that we will provide up to 20% of the purchase price of a property as down payment assistance. We do that in the form of a loan. Our interest rate is -2 from the First Trust lender's interest rate, because we know that borrowers need to be sensitive to that price. And in high cost markets like DC, it's especially important for us to make sure that in the end, when a borrower has to actually start making these active repayments, that they will be able to afford those payments. And how our program works is we offer a 5-year deferred interest period, which means for the first 5 years, the borrower has the opportunity to settle into their First Trust mortgage loan. They can use that additional savings they can use that additional monthly savings to put towards their First Trust mortgage. They can use that to put towards our deferred interest payment. We do have a deferred interest balloon payment that comes due at the end of the program. We like to make sure that our borrowers are able to succeed, not just in their First Trust, but also with our program as well. And we've done a lot of great work with HPAP as well to further extend that. I think our borrowers at the lower end of the AMI scale were definitely able to utilize HPAP and our program to get to a point where they had a more flexible mortgage and a more affordable mortgage payment, so they were able to stay in their properties. They would potentially be able to stay in their properties for longer. Borrowers at that lower end of the AMI scale, when you're talking anything under under 80%, that's where the biggest struggle is. But those are also the communities that we most want to help. Those are typically people who have lived in the DC area for many generations and have deep roots in this community. And we want to make sure that we're able to provide them with the opportunity to live in the neighborhoods that they have been participating in for their entire lives. It's been very, very, very important for us to acknowledge the level of commitment borrowers have to remaining in this city. And it's how we actually find the opportunities to provide the assistance and the step up that they need in order to get into actual home ownership.
How are you ensuring, I mean, these are just amazing products and policy solutions to address this complex, multi-pronged issue and just address all the barriers from end to end. But how are you ensuring that the needs of buyers are really reflected in your work? Harvey, I'll start with you.
It's interesting because you have a lot of buyers that come in that don't understand the avenues of purchasing a home. And what we've done is we've emphasized with our lending partners on educating buyers on the process of buying homes, getting that credit score from a 620 to a 700, just because understanding the processes of going through and finding the programs and helping them and partnering with MANNA to go through a home buyers program so they know exactly what they're getting. And also we're implementing more of like when people buy homes, because a lot of folks come from renting, is understanding the importances of maintaining your home and your taxes and making sure that your bills and things are paid like that, because later on you may want to refinance, put your kids to school or start a business. And that is one of our biggest things that we're working on, and making sure that they understand the programs that are out there and taking advantage of everything. So that's key for us because of the difference between 5 years ago and now with the interest rates and how they're going. It's up to us as a company to educate them.
Absolutely, absolutely. Well, you mentioned interest rates, so let's talk about the economic impacts. And we know the term housing affordability is all the buzz right now. It's a major issue across the country, and especially in this region where housing prices continue to soar, where interest rates are rising, insurance costs are also increasing, and thus more capital is needed to create and purchase homes. Can you share a little bit more about specific tools that your organizations are utilizing to address the specific economic challenges?
So I think I shared with you about, again, our major homeownership entry point is HPAP. With HPAP, you can use it for down payment assistance, but you could also use it to buy down your interest rate. And I think a lot of people don't know that, but that is an opportunity so that your interest rate could be bought down. You have a longer term affordability. So we're allowing that, we're promoting that. In addition, we have, there are opportunities depending on the situation where you can get tax abatement if you're a first-time homeowner. So that tax payment comes down. I also think that, going through housing counseling, we pay for a number of partners and support a number of community-based organizations that provide financial counseling and housing counseling around what to do, how to do it, and we hope that they're out there in the communities that they serve and educating people on how to do that. But those are sort of the major things that we can do in terms of going against the crosswinds of the economy and just trying to figure out, again, locking in an interest rate that works for you, making sure that you get all the down payment assistance that you can. And one of the things that I see happening is that a number of people are just relying on HPAP. there are other down payment assistance programs out there. So HPAP is not the only one, and even some of the lenders that you're working with, and Harvey, some of the home builders that you may be working with also have incentives and programs that you can, in addition to HPAP, help to sort of buy down. That, the more that you can put towards a home, obviously, the greater help that it is to sort of deal with the economic upturns. And again, we'll continue to try to make sure that HPAP is going with the winds, and that we're using that to make sure affordability is maintained. I do, hopefully there are more products that come out as a result of this. I think about purchase money mortgages, right? Are there things that we can do to incentivize people to do purchase money mortgages, so that if there's in terms of even heirs properties, right? Like if I'm selling my house, maybe I could do a purchase money mortgage so someone can annuitize their payment to me, and it's not capital gains, maybe it's a retirement. So think about things like, that are different. I think this is a transformative time, and we have to think about those kind of policies. And I encourage developers to come up with their own mortgage products, right? I know that's hard. It's hard on the balance sheet, but again, if these folks can underwrite, that's another way to come with their own product. And I encourage lenders, right, to make that 40-year mortgage possible, and work with the government to figure out how we can do that. And that is another product that would help sort of go against the economic crosswinds that are there today.
Harvey, any economic tools you want to mention?
I'm glad you brought that up, because Colleen, you're directly on point in reference to developers, because right now we do have to come up with different avenues to help with down payment assistance, outside of making sure that they go through the home buyers programs and not counting on the city or the municipalities that people are trying to purchase homes. We've looked at targeting our prices to our audience to make sure that they can afford it. Yes, does it help your balance sheet? Nope, not really. But if you're doing volume, you make it up over time. Does it help that we do incentives such as pay downs of the interest rate? No, not really right at that time. But if we're looking at it over a 10 or 15-year time, you're looking at it helps you there. Other things that we can do is make sure that our lenders are coming up with programs with them, and also adding credits to the buyers as well. Our title companies, we're going back to them and asking them, making sure that they're given incentives as well. So we don't want to put it all on the municipalities of them, trying to solve the problem. We have to be part of the solving the problem as well.
Absolutely, absolutely. It takes a public-private partnership to really address this issue. And I'll also add that MANNA is one of the CBOs partnered with DHCD to deliver these services. And we've also fundraised privately to corporations to provide extra closing cost assistance that's granted to buyers to help them get over that last hump. So every little bit counts, and it's very important to be able to layer on these different opportunities for first-time home buyers. So I'm going to go into sort of the mortgage lending issues. There's evidence that there's bias in mortgage lending, where Black applicants are denied mortgages at a higher rate than their white counterparts. So I'd like to understand what are the primary factors that are contributing to this, and what steps can be taken to address these issues. Lisa?
Yeah, one of the statistics that I recently stumbled upon while I was doing some reading, in 2022, the CFPB reported that HDMA data revealed that DTI had become more likely to be reported as a mortgage denial reason.
What is DTI?
Debt to income ratio. So that's essentially where you take how much the borrower makes on a monthly basis and you add up all their debts, including mortgage payments. And when you're in the mortgage process, typically what happens is they're going to calculate your DTI based on your debts and your projected mortgage payments. So typically, as that's calculated, most conventional mortgages hang somewhere around 45% as the typical DTI. What we've seen in our program is that specifically for borrowers of color, it is getting more and more difficult due to the increasing interest rates to get a mortgage payment that's going to put them under that 45%. And when you're taking into account the fact that a lot of these borrowers have significant student loan debts, they make salaries that are on average significantly lower than their white counterparts. When you're looking at these issues holistically, what you're coming to is a picture where that 45% DTI is placing them outside of the ability to actually obtain a mortgage. And our organization looks at this in two ways. So if you're going through the mortgage underwriting process, you come into that door, you start that process 30, 45 days before you're coming up to closing. You have a good and stable job. Everything looks great on paper, right? Anything can happen to you at any point in time after you close on that loan. So additional scrutiny being put on factors like DTI for borrowers of color, I think, is something that we need to, as a group of individuals who care a lot about this specific issue, we need to be looking at this more sensitively. So in terms of DTI, I think it's important for us to be considering not just a person's debt, but their ability to handle those debt loads, what their student loan payments look like. There are some discrepancies between how Fannie Mae and Freddie Mac are handling student loan payments. One of the ways that our organization has determined to do that is if a borrower is on an IDR, that's an income-driven repayment plan. I'm sure many of you might be familiar with that term currently. If they can provide us with a statement that says that they are on an IDR currently, we can zero out their mortgage payments. And that has done a lot of significant good for many of our borrowers, because if you're looking at this when our payment becomes due in 5 years, typically you're not going to see someone's salary increase so drastically that they're going to be stuck with a student loan payment that's going to knock them out of bounds. So this is one of the policies that we put in place in order to kind of get a baseline for this in terms of how we're looking at a person's debts and how we're evaluating those numbers. We always want to make sure that we're giving borrowers the biggest chance and not counting them off with a student loan projected payment of $267 when they're on an IDR currently that's going to recertify on a yearly basis. There are ways to look at this where we can get to a baseline where we're providing more opportunity instead of taking opportunity away from borrowers. And I would fall back on that initial conversation where the gentleman mentioned African-American student loan borrowers typically have a significant amount of debt. So when you're looking at policies that you're putting in place for your organizations in terms of underwriting, I think it's important to look at what is causing it, how did we get here, and how can we solve it practically without going by any sort of ill-formed policies. I think that that's a smart way for us to kind of adapt to the situation that we're currently in, and acknowledging where borrowers currently are in their finances. Another thing that we do is we make sure that we are line for line adjusting for borrowers' debts. If they hit a bump in the road, tell us what happened. I think a lot of mortgage lenders at traditional banks can sometimes look at a borrower's file and just preliminarily say no, without looking at the situation any further. We try to make sure that we're looking at the borrower's total financial picture, their history of repayments, their job history. What does that look like? Or have they gotten raises on a regular basis? Is there something that we can do? Do they have a good history of savings? These are all things that we look at to make sure that our underwriting is looking at a borrower's holistic financial picture versus looking at just a credit score and a DTI ratio with no other information.
Thank you, Lisa. That really speaks to the issue of not just creating home buyers, but also sustaining home ownership and ensuring that once buyers get into their home, they can stay in their home and pass that home on to their heirs and family members. And so it is clear that sustaining home ownership is also an issue. Given the Black home ownership rate in DC over the last decade, we've seen that rate dip. Let's talk about why you believe that we're losing Black homeowners in DC and what can be done about it. Director Green?
I am not wholly sure. I mean, I think some of it might be foreclosure. I'm wondering if the loss, that percentage rate, is really reflecting the increase in population. Right, so the percentage of Black homeowners may be decreasing, but are there new entrants in DC? You know, what demographic is that, and is that affecting the dip in the percentage? So sometimes I look at that number and I'm like, yes, decrease overall, but what are the factors around it? One of the things that I was just thinking of sitting up here is that we often talk about first-time home buyers. And there's a lot of help for first-time home buyers. But for people that are transferring homes or upgrading homes, there's a challenge there as well. And one of the things that I have always thought about is, like, why can't they transfer their mortgage to the new home, which I think there's only maybe like FHA does that right now, or just it's not, widely done, but that is also something that helps. So then you don't lose the home buyer, right? If their home becomes too big for them or whatever. And then in terms of the debt to income ratio, people now own another home, or they're renting out their home to family members, or and that's still on their credit, that now they no longer can become a home buyer, right? So you lose them in that sense as well. So why it dips, I think there's also been sort of an economic strategy to diversify DC and bring more income to DC, right? And that's what's happened to improve the economics of DC. And so again, on a percentage basis, the home ownership is going down, and with that, the prices are going up. So there is a need to create new home ownership, so I don't have the answer, but those are things. It's a hard one.
Do you see the need for post-purchase support to homeowners once they get in their homes? Harvey or Lisa?
I would say 100%. I think it's important to, as we're talking about these programs, it's not just about getting folks in the door. MANNA has been very helpful, and we're in ongoing conversations about how we can provide additional services to our borrowers to make sure that we're supporting their homeownership journey in its totality, not just at inception. I think there's a lot of focus on getting Black homeowners in the door, and then we're sort of saying we fixed it, we're done, and that's not necessarily the case. We want to make sure that we're able to provide a lot of support assistance, whether that's financial counseling, whether that's, hey, am I ready to refinance? What would that potentially look like for me? I want to sell my property. How long do I need to stay here? We want to make sure that we're able to sustain our borrowers throughout their home ownership journey, whatever that looks like. I know on average in DC, I think the average homeowner stays in their property around somewhere between 7 to 9 years. And I know that's what we've seen in the previous version of our program as well. And 7 to 9 years, that's a significant commitment. And everyone's going to come at that number at different ways. Like, some people are going to want to stay for 5 years. Some folks are going to want to stay at 3. But what does that look like? And also, when they get to a point when they're looking at selling their property, how much funds will they be able to take out of that versus the amount of assistance that they receive to subsidize the purchase price of their property to move on to the next home? Because wealth generation only really works if a borrower is actually able to get in the door of a property and actually stay there for, somewhere in that 7 to 9 year range, and then move on to the next property as their family grows or as their job changes, and be able to move on to the next property. We want to make sure that our borrowers acknowledge the trade-offs in equity that come with participating in any sort of down payment assistance program. And we also want to be sensitive to the fact that we want to prepare homeowners for what that looks like and how they can get into the next home when they leave this property. I think it's important for borrowers to be well prepared about what assistance programs look like and what their repayment terms are and understanding all of that. And I know in our experience, borrowers are super excited to get to a closing table, but then it's like after you get to that point, what happens? And we want to be there to make sure that we're there to explain, we're there to answer all the questions. If they're participating in HPAP or other assistance programs, we want them to know that, hey, if you've got a question about this process, what it looked like, what it's going to look like 5, 6, 7 years down the line, we want to answer those questions. So I think it's important for us to be thinking about how we can sustain the homeownership, not just provide the initial homeownership. I think both of those things are equally important as we're speaking about expanding Black homeownership.
And I'll just add that, through our neighborhood-based activities and community-based organizations, we do provide eviction prevention counseling and foreclosure prevention counseling. One of the things that I think I should mention coming to mind, and to be very frank and honest with you, there was a lot of pandemic relief programs, and we're coming out of that now. And very clearly, like the Homeownership Assistance Fund that we had was a COVID program that was funded by the federal government. It's sunsetting. So I think that people there was some behavior change. We see it in the sort of housing ecosystem overall, and people need to learn again that there's that responsibility, and those programs that were pandemic relief programs are no longer going to be available. So I think it'd be interesting to see what happens with the Black home ownership rate if people sort of don't get on board in terms of, now this is still my responsibility, right? Because those programs have ended or are ending or very soon. And so I hope that that's not an impact, and that's going to be, hopefully not going to be realized in the way that I think it might if people don't get on board to understand that that's not there anymore.
Thank you for bringing that up. The Homeownership Assistance Fund has been very, very important in ensuring that households that were disproportionately affected by COVID, maybe had challenges with their mortgages, can actually stay in their home. So that was very important to retaining our current homeowners in the district and even across the country. So let's talk a little bit about what can our audience and those who are listening virtually do to get involved in advocating for wealth building through the number one tool that we know to build assets, which is homeownership. What can audience or policy practitioners, advocates do to get involved to address this issue? Harvey? Who wants to start?
Education. We have to become more aware in educating the buyers and the existing homeowners of how to stay in the house, how to maintain a house, and how to purchase a house. I didn't know how to purchase a house until I was 22, 23, bought my first house when I was 25, but I wasn't educated by my parents. So that's one of the things that sticks with me, is that when we do sell a house, we educate the parents or the buyers on how to stay in the house, the purpose of the house. Your house is your savings account, over a period of 7 to 8 years that you build that equity to stay in the house, to help your kids go to school, help start a business, or potentially, help put a down payment on your son and daughter's house when they want to buy in the city. So education for me is key. And again, all the different programs and how us as developers that we can, change the landscape by, sharing the line edges of educating, as well as, helping with assistance, down payments, or other different programs as well.
Do you ever wonder, when you drive in certain areas, you're like, who are buying these homes? I think I know a lot of people, and I don't know people that can afford these homes. They're $1 million, $2 million, $3 million. I don't know who they are. Like I honestly feel like I have a very diverse group of friends and family, and none of them can really afford maybe one or two, but not a vast majority. So I always wonder about that. And so I feel like there is some creativity that needs to happen to affect the market and to stop the inflation of the pricing, and whether that be federal or local or whatever, like even sort of like building costs have gone up. I mean, Harvey could speak to that. Like the cost of construction have gone up, and they continue to go up, even though some things have stabilized. You know, so insurance continues to go up, even though some things have stabilized. So I feel like there has to be some real, like, where the government can, and it's not just the government, where the government can sort of put measures in place that are sort of like non-capitalistic solutions in some ways, to say, stop it, just stop it. Like there's a run on this in the economy that is not making sense to me. So just creativity around products, creativity about how we think about this going, because if we're going to continue to we're either going to have to stop the economic issues that keep going this way, or we're going to have to match with the products, like the 40-year mortgage, the greater interest rate buy-downs, the different looks at DTI, I just, like, I don't know who buys these homes.
Yeah, I can say I've lived in and around this area for probably 30 years. And I actually, when I was in high school, my first jobs were at Washington Hospital Center. I now drive past homes that I think were probably around $200,000 that are now selling for over $1 million. I think about this on a regular basis, just like you, when I'm driving around the city. Like, what has happened? And I think it's very difficult for us to have these conversations without taking into account like simple things like, so if the incomes aren't going to keep pace with what the income that you need in order to purchase a property, how do we stop this? And one of the things that we continue to have conversations about with all of our partners, et cetera, is making sure that we're all thinking about this and how can we expand opportunities inside of the framework that we all have to work inside of, right? Currently, it's a 30-year mortgage, and maybe a 40-year mortgage is the next step. Mm-hmm. But at the same time, it's like we're extending that debt load, right, for a particular borrower. And is that actually going to stop the purchase prices from continuing to escalate? This is a complicated issue. I don't think that there's an easy solution to it, but I think that everyone needs to start thinking about this in terms of how can we make sure that we're trying to close the gap. And I was at an SPCP talk the other day, and another startling statistic that I heard is that if white borrowers their income stopped increasing generally right now, that it would take somewhere in the neighborhood of 320 years for Black Americans to catch up. And I thought, that can't be right. So I went home and I Googled it, and I was shocked. I mean, we all know and understand that this gap exists, but we forget sometimes how significant it is and how long it took us to get here, and that it's going to take collectively a lot of thinking, a lot of brain power, and a lot of intentionality to get us to a place where we can upset that apple cart and turn this around. And I always fall back on the policies that we need to start implementing and thinking about in terms of whether that's issues like DTI, whether that's credit scores, whether we're looking at the homeownership preparation. I saw a very shocking video the other day where someone had just purchased a property and was shocked that their personal property taxes immediately went up. And my thinking was, how did we get into the door of a home without acknowledging that? We need to make sure that we're actually preparing borrowers for what this looks like. And yes, property taxes will increase. Your homeowner's insurance definitely will increase year over year. We need to make sure that we're preparing borrowers for what this looks like with real information and not just taking for granted that they understand this process. Because Like I said, a lot of borrowers are very excited to get into the door of their first home without thinking about what that means in the long term, which means there needs to be a little bit more focus on the education and the support services post-closing. I mean, how many borrowers know that you can dispute your property taxes? There's a process for that. Not a lot of them. How many borrowers understand that sometimes in order to avoid DTI issues, sometimes they're getting insurance that's not adequate to meet their coverage, which means that if they had a loss after closing on their property, that they could potentially put themselves in a situation where they're not covered enough to replace that property. There are a lot of things that borrowers are not actually aware of, and we need to make sure that as lenders, as real estate agents, as nonprofit housing providers, as affordable housing advocates, et cetera, that we're actually being intentional about making sure that borrowers have this information, because for some of them, it's going to be the difference between being able to maintain that home ownership or losing it.
Thank you. Harvey?
The key word has been intentional. Last week, I had my staff go through all our previous buyers, and 50% of them wasn't taking advantage of the homestead tax exemption. I got my admin on the phone. I said, call every single homeowner and let them know that they're paying the city extra money when and I knew most of them that lived in their homes. It wasn't rental homes, they lived in their homes, and I had them call them to make sure that they understood that, hey, get your paperwork in so you can take advantage of living in your home. And that's one of the things that everyone has to be intentional about. And the other thing that we're looking at, and as we're doing it, we're building communities. As we're building communities for folks from 15 homes to 20 to 30, we're building communities for first-time home buyers that would have probably never taken a stake in the city. So, and we're intentionally doing that. And we're partnering with City First on our construction, which has been tremendous support for us.
Yes, intentionality is very important, and that's why we're all here. We know that housing supply, or the lack of housing supply, also contributes to the problem in access to home ownership. And we know that the tools have been limited, although in DC we have many more tools than other states can speak about. But we also know that to create affordable housing, there are many more tools available for affordable rental housing than there are tools to create affordable owner-occupied housing. Harvey, can you just share for the audience sort of what advice do you have for developers who want to get into the homeownership development space, given the lack of tools, but with the tools that are available, how you're utilizing those?
Understand your market, understand your client, understand the dynamics of partnering with the municipalities that are in the area and the different programs that are out there. And also understanding that you, as the developer, you have a torch to carry, meaning that from start to end of building a product and understanding that you're changing people's lives as you go through that process as well.
Thank you. Well, we've explored the tangible impacts that affect the inequities on Black home ownership, and it's clear that addressing these challenges require just a multifaceted approach. It requires public-private partnership, and as we move forward to continue this dialogue and take concrete action that promotes equity and fairness in the homeownership space, we're really just thankful to NHC and the Black Homeownership Collaborative for creating space for this important discussion. Thanks to our panelists for sharing their expertise, and to our audience. I also want to thank those who are participating or at least joining us virtually, and I want to give a shout out to my team that are listening virtually, who do this work every day on the ground to address affordable homeownership. Thank you.